Hi everyone, Gerard here with FXLiveDayTrading.com. Had a great day today. It was FOMC, and I want to give you an idea of how I trade crude oil and what I'm looking for over the course of the next 2 to 5 days in crude oil. Okay everyone, so crude oil, first I'm going to just summarize crude oil in general. If you are interested in trading crude oil, you're going to trade it in something called a future. And how do we open a futures account? Well, if you have, let's say, TD Ameritrade, or if you have interactive brokers, some brokers actually offer that so that you don't have to open a separate futures trading account just to trade futures. So, for example, you'll have to fill out a disclosure. If you have, let's say, TD Ameritrade, you'll have to go to a separate section within that platform, fill out a different disclosure. Usually it'll take like a day, they'll get back to you. Interactive brokers is actually much quicker. You can fill it out, everything online, done. And then what you have to do with them now, some of them will provide you quotes, TD Ameritrade does, and then others you have to pay. I have a bundle, I think it's like $5 or $10 a month, and that's a bundle, and that includes quotes from the different, for example, CBOT, you have the CME, then you have the NYMEX. These are all different exchanges, and there's a fee for each futures quote. And you know, for example, like I said, I get the bundle, I think it's $5 a month, and then I get the options, which is 10. So needless to say, these are important. So that feed goes into the interactive charts, and then you can go ahead and display the charts. But getting to futures in general, what is futures? Well, futures, so the price of crude oil goes up and goes down, and then what you're doing is you're purchasing, let's say, a contract rather than taking delivery of the actual barrel. So that's called a futures contract. Farmers will utilize, you know, let's say, buying or selling wheat contracts so that they can hedge themselves depending upon what kind of winter, what kind of, crop they're going to have for that year. So essentially, futures originally were developed to help the farmers speculate, so to speak, and hedge themselves, so to speak. So, for example, if they felt that there was a harsh winter coming, therefore they weren't going to be producing a ton of wheat, you know, a farmer can go out if he understands that most likely that crop is going to move up in price because supply and demand. If there's a very harsh winter, there's going to be less wheat, and you can go ahead and purchase that as a contract. But I'm not going to get sidetracked too much into commodities. They would be called commodities. Well, oil is a commodity as well, but you know, rather than talking about wheat, corn, and coffee and things like that, we're just going to stick with crude. Okay, so you have crude. You can trade it as the CL, as I was saying before. That's a larger contract, and then you have the E-mini. Okay, and the E-mini is just a smaller version of that contract. Okay, so what we did today was we tracked it closely. There was a move down yesterday. It was short crude yesterday. Today we did move lower overnight, and then we popped higher. There was some news. There was like a mini OPEC meeting, as they call it, and they were talking about more cuts there. So, you know, these crude oil is driven, it's very news driven. So you not only have to look at you know, the fundamentals, you do have to be aware of geopolitical events and how they can affect crude oil. So just keep that in mind if you're gonna trade crude. Another thing that you want to keep in mind with crude is there is very aggressive swings in crude oil. Sometimes you'll see an aggressive swing from top to bottom of, like, you know, 2.5%, 1.5%. That's not uncommon. Now, a couple months ago, if you recall, we were seeing some very aggressive swings. I remember shorting crude on one day, and it was down 7%. So yeah, that was that move lower. Now, get this, we are up 30% from our low on crude oil. And I think this area right here is going to be a consolidation area. Yes, we moved up above that $60 mark. And I'm going to go ahead and show you a little bit more in depth on the charts right now behind me. Okay, everybody, so here we are. This here is the CL, and it's the May 19th contract. This is with the NYMEX, okay? Now, this chart that I'm using is the daily candles, and I wanted to first just kind of give you an insight on what it looks like from the daily chart, and then I wanted to tell you why I think we're going to start seeing at least a pullback. I'm not going to say it's going to be a major reversal, but I think we're going to see a pullback on crude, and I think we're going to see that coming up over the course of the next few days. And this has been something that I have been discussing the last few days in the trading room. Excuse me. So let's talk about these key levels. The 60 level that we are at right now, we're broke the 60 today. We're at 60.10. And, you know, keep in mind that we were flirting with this area for quite some time. And we've been hovering right around this 50% Fibonacci area, which for me, and it's going to depend really what charting system you're using, you're going to have a little bit of differences as far as the price, but 59.56, give or take, 50% fib area on this, and we're looking at right here, you know, we are trading above that. So who's to say when this is going to turn? But I'll tell you why I think it's going to turn. 70% of the correlation that we have been seeing in crude and the stock market has been pretty much, you know, together, okay? So when I say a 70% correlation, that means that 70% of the time the stock market is moving up, you're seeing crude also move up. So I believe we are going to be reversing in the stock market. Hence, I believe that we're going to also see crude move lower. I know that there has been some disruption, some news coming out. They had that mini OPEC meeting. And again, we're hearing a lot of cuts, and then we have you know, trade sanctions on countries like Venezuela. Okay, that's the news. But as we know as traders, the news is not always the most effective way to go ahead and, you know, invest or trade. And when I say invest is a longer term commitment for your money when you're going to go ahead and invest. Usually investors are holding it for a few months, few years, where traders typically, well, if you're a day trader, you're out by the quote end of the day. Swing trader could be anywhere from, you know, 2 days to a week. So as far as this trade setup is concerned, what I'm looking for is a move back down to this area right here. Okay, we're going to be looking at right around this 57.90 area. I believe we're going to back off of this 50 fib, come down and retest some of these areas here. And hence, I believe it's going to be right below the 58. I mean, it could very well make a reversal and come back down and then consolidate right around this level here, which is that 61.8 fib. I don't know. I mean, hey, for all we know, we can come right back up to this 62, 63 area and then consolidate. Who knows? But I can say this. I have made a bet, and yes, trading is a form of gambling. Let's face it. I mean, you gamble every time you drive a car. So gambling, I believe, is the right terminology. So you want to have an effective way of gambling. And what's an effective way of gambling? Well, I'm going to talk about that in just a little bit. I'll get a little bit more in depth. I don't want to get too far off. Sometimes I go off on a tangent. But the bottom line here is this is the chart of crude. Tomorrow I'll go over the S&P a little bit more, but I have to do a lot more research tonight for my own trading to be ready for tomorrow, and also I'm going to be looking at trading the Asian session tonight. So needless to say, these moving averages here on my chart, we still don't have a signal, okay? as far as the downside is concerned. And you know, this is more of a something that we have to see confirmed. So in other words, yes, I stepped in. Okay, so as I said, I stepped in on a trade, but I did not step in on a big way in this trade. It's just kind of to get the feet wet, that first position size, and then what I will do is I will add to the position side as it moves in our direction. So just keep that in mind. Everybody has a different way of trading. Some people do a set and forget, and they only do one position size. I like to move in. So I took my first position, and I'll wait, and if it goes in my direction, then I will go ahead and add. My ultimate level, as I said, is going to be right around that 57.80 area as a target. And as far as a stop is concerned, if we start moving up much higher and even retest this fib, I want to see a daily candle, and then we move up, I'll probably just get out, take a loss, and we'll see where it goes from there. But as a rule, I believe this area right here is solid enough where we're going to hit there, probably come down, and that's, for me, a swing trade. So that's how I'm calling it, and then I'll talk more about the stock market on the next video, as I said. Let's just jump real quick and just take a look at a shorter term level here. Okay, this is the 30-minute chart. Okay, before we were looking at the daily. You could see that we got some mixed signals here. You know, we had the long, and then we also had the short, because those moving averages were, it was basically a consolidation area. Needless to say, the trend is still up, so be very careful. You don't want to, if you do like this as a short, you want to start off small, okay, and then you can go ahead and add to it as it goes in your direction. So just some thoughts